when it's wrong to be right. In our modern society, it seems like a foregone conclusion that it's right to be right. When you turn on cable TV news, it's common to hear commentators fighting to determine who is right and who is wrong. Our politicians can't go a minute without arguing over who is right and who is wrong about every conceivable issue. As traders, we too fall into this trap. A quick trip to social media will lead to endless examples of perfect strangers arguing over the rightness of their positions. But when is it wrong to be right? After initiating a position, many traders let their ego get involved. Maybe they tell their friends or family they bought a stock, or announce it to the world on social media. Now, as the stock turns against them, they have an interesting decision to make. Do they admit they were wrong and cut their losses, or do they dig their heels in and hold onto their positions and their convictions? For those who choose the latter, they often find themselves in a very costly predicament, as there's a heavy price to be paid for those who need to be right. Losing positions tie up your emotions and your capital. Just one big loss can totally devastate your account. People often think, but it's just such a great deal. This stock is a bargain. The fundamentals are wonderful. Everyone loves the product. It just can't go any lower. The problem with this thought process is that the market is always right. When you try to prove you're smarter than the market, you enter into a futile effort. No matter how hard you study, hope, or even pray, no amount of effort can ever force a stock to change its direction. In fact, once a stock starts to trend, the line of least resistance is usually in the same direction, just like a rock rolling down a hill. Big losses are extremely difficult to come back from. Remember, a 50% decline takes a 100% return just to get back to break even. It's a psychological and mathematical situation you never want to get yourself into. Even well-known companies like Netflix, Zoom, and Microsoft have had large declines. Holders of stocks with these types of moves lower often have to wait years just to get back to break even, and some stocks like Enron simply never recover. Don't ever let yourself get in this type of situation. Make a commitment to cut your losses quickly before they get out of hand. When most new traders venture into the market, their goal is to be right. They want to have a crystal ball to determine when the market will turn. They want to be geniuses. They want to be right. These type of ego-based endeavors won't work in the market. In fact, my goal when I'm trading is to not be right. My goal is to make money even without being right. Now, some of you might be thinking, why would somebody want that type of goal? It's simple. Because I know I won't be right. Think about it. How could someone have predicted COVID-19? If I asked you on November 1st, 2019, what you thought the chances were that the vast majority of the world would have to stay at home, that schools would have to close, that masks would become mandated, would you have believed it? Most likely not. How about the 2008 crash? How many people do you think saw that coming in 2006? And the same goes for the next black swan event that no one sees coming currently, that in hindsight will seem inevitable. So how can we be wrong and still make money? The key is to manage the relationship between your wins and losses so that a few big winners will pay for your many small losers. Let's say, for example, trader A has 5 trades. On his first 4 trades, he loses $100 each for a total of a $400 loss. On his 5th trade, he makes a $700 gain. Here's an example where a trader was right only 1 out of 5 times, or 20% of the time, and yet still came out with a profit of $300. The opposite example of this would be trader B, who was right but still comes out as a loser. For example, let's say this same trader also makes 5 trades. The first 4 go really well, and he makes $100 on each trade for a $400 profit. He begins to become very confident, believing he has mastered the market. With his confidence at new highs, he places all his money onto his 5th trade, knowing he just can't miss. His luck quickly turns against him, and he loses $700 on this one trade. Now here's an instance of someone who was right 80% of the time and still lost money. So how can this be? It's because trading profitability is not about being right. Trading success is more dependent on your ability to manage the relationship between your winners and losers than it is about being right. While most people who trade are in the domain of rightness and ego and predictions, in the end, they'll come to the realization that they're on the completely wrong path. Make the core of your trading risk management, discipline, and money management. These are the things that will enable you to win in the long run, even if you are wrong the majority of the time.